Hey everyone, I welcome you all in Hold with Priyank, and today we are going to discuss another topic of technical analysis. But today we are not going to discuss any specific strategy with any indicator, but we are going to discuss how to trade support and resistances. Oh Priyank, why are you teaching us to support and resistances? If you remember, a couple of weeks ago, I uploaded a video in which I taught you how to draw support and resistance. But in this video, I am going to teach you how to trade them in a way which is quite effective and that may help you improve your trading and your results. You don't believe me? Just let's go ahead and understand this concept, the where I'm going to teach you when breakout fails, how to trade them. Just go ahead and read this disclaimer and I'll meet you with charts. So you can see I'm using here Bitcoin dollar chart. I'm right now on the daily time frame, but I'll be using different time frames in different videos. But more likely, I use daily chart because I prefer using daily chart. Why I prefer daily charts? I would also explain you that because daily charts helps you understand a complete projection of a particular 24 hours. Then algorithm reset. A person who is trading, he resets himself. He sleeps. He wakes up, he comes with a new mindset, you comes up with a new mindset. Even a fund manager or a institution player or a whale, he also comes up with a new mindset every day. That's why I prefer using daily chart and I like it. Okay, all right. So in last video I taught you any price level, okay, any price level which helps you understand that price is behaving in a different manner. So let's suppose if price was going up and at this particular price started behaving differently. Either it starts dropping or it may start consolidating. These levels are key levels, all right? And if you use these levels to buy, we call it support. And if you use the same level to sell, we call it as resistance. I believe you remember that, all right? So how we usually learn to trade them? We usually learn to trade it like when price is going up, it breaks above the resistance, it becomes support. So the resistance becomes support or the support becomes resistance, vice versa for both the scenarios. So in this scenario, usually this resistance becomes support and price likes to go up like this. That's where it was, we were considering it resistance, it didn't work. Then it started working as support and it usually we like to trade. But what usually happens when we try to trade them in reality, in practical life, in daily life, in intraday, in scalping, what usually happens is when price reach there, sometimes it makes some kind of patterns, candlestick patterns, some kind of signals it generates, which allows us to go into the trade directly, which makes us think that price is going either up or down, whatever the mindset you have. And people often like to trade it like this. If this is my resistance, as price reach there, I will go and sell directly. Sometimes people comes like this, they consider it support and they buy directly. So like, you know, every strategy, every way of trading has its limitations. So they usually they usually give you stop loss, they usually give you targets with different accuracy or win rate. I understand. So you can debate with me that Priyank, when every strategy fails and every strategy succeed in the same manner, if I directly buy and directly sell, that also helps me achieve my financial goals, and that should, because there would be numerous time it would fail, but there would be numerous time it would succeed, correct? So people usually like to buy and sell directly. But what usually happens and what I have experienced, when price reach to any support or resistance level and we directly go and buy or sell, what happens is we cannot control our emotions. Why? Because if price is going like this, we consider it resistance, right? We consider it resistance and we thought that we will sell. But what price likes to do, it sometimes goes a little bit high and drops back. Sometimes it drops a little bit early. Sometimes it goes like this and start consolidating and we get fed up. And even before price could make its move, we exit our trade somewhere around here, thinking that we are going to hit a stop loss. And that's where your rational decision becomes emotional decision. And that is what we don't want. That's why you're watching this video. So in order to remove these emotions, you need some kind of setup, some kind of strategy, some kind of concept to trade these support and resistances. Today I'm going to teach you a very good way of learning it, and that is immediate and rounded fake out. So all those who have been following me from last year, they already might have seen this video in Hindi on my Hindi channel. All those who want to watch it in English, here it is. All right. So immediate fake out and rounded fake out. These are two concepts which I usually use to trade failed breakouts. Okay. What is breakout? So whenever price breaks above any level and goes like this, or price breaks below the level and goes like this phenomena is called breakout. So this is usually the textbook setup. That's how it should work. But usually it does not work like that. Sometimes price goes like this. And this is where all the confusion comes up and we don't understand which is the right breakout, which is not. Many a times price do like this. And this is where we consider it breakout. We try to enter trade here to buy, and then it goes like this and we got trapped. So these kind of situation usually happen. So whenever a breakout fails, so price goes like this and drops like this, price goes like this or this is something I called a failed breakout. And in short, I call it fake out. Okay, so I will be calling it fake out when it is a fake breakout or failed breakout. I will be calling it fake out. And if you can understand fake out earlier in the early stage, you can utilize them for your trading. How? Let's go ahead and understand it. So the first concept is the immediate fake out. In this, what I say, whenever price is going up and you are considering it as resistance, don't sell directly, wait for a fake out. And if the first candle goes like this is the breakout candle. The first candle which breaks the level, suppose this is the level which breaks above it, this is the closing price, so it's a bullish candlestick. Whenever price comes to the line, okay, there could be two ways. Either it closes like this or it can go like this. It closes like this and it is again a bullish candlestick. So whenever price reach to a resistance, these two scenarios may possible and you are trying to sell it. So when you see a wick, this gives you an idea that more likely price got rejected or it is a fake out. But it's not necessary. If you would see in practical life, many a times price still continue going up and we got hit by stop loss. So this is not the right way to check a fake out. The right way to check a fake out is to let people believe that it has broke out, and that usually happens when candle closes above the level. So in this case, it seems like that level is broken because candlestick has already closed above this particular level, right? But whenever a candle closes like this, don't go ahead and directly buy. Don't consider it a breakout, because what may happen, next candle may come back down again and this may close here and it may become a bearish candlestick, and that usually happens. And whenever you see this kind of pattern, this is called immediate fake out. That means that the breakout candle immediately closed back to the level below. So in this case, the price went up, closes above, closes back immediately, and we call it immediate fake out. And you can utilize this in your trading. What you can do, you can make a trading setup with that. And what is that? Wait for price to close below the breakout candlestick. So this is the breakout candlestick. Maybe this candle immediately closes back below this. That's perfect. If it does not, wait for next candlestick. As price comes back below and close like this, as the price closes back below this, there you enter the trade. So this level becomes your entry price. If it is very close, you can enter directly. If it is a long candlestick, you wait for price to return like this. So this is where you enter, okay? And this is where you put your stop loss, and minimum 1:1 is your target. So that's how you can utilize this fake out into your trading, and we call it immediate fake out. I'll show you the practical example of it on the chart, but first let's go ahead and understand a rounded fake out, because these are very close to fake outs and there is a very small difference between them. So it's better we understand on the paper first and then we watch it on the charts with the candlesticks directly. So let's suppose this is my resistance level. This time candlestick comes and closes the same way above this price level, and it's a bullish candlestick because price is coming from the down. But this time the next candlestick does not close back. Okay, what happens is price keeps going up like this and it start consolidating nearby like this, and after some time it closes back. So it becomes a rounded formation above this particular level. There is no fixed number of candlesticks here, there is no fixed number of timings there, or there's no fixed number of length you need to measure it. It's not like that. It comes with your screen time. So what differentiate with your screen time and experience here, you need to check that when this phenomena happens, when price moves a rounded consolidation and come back below, there must be a break of structure or shift in market structure, okay, at the downside. So market structure should shift. If market structure shifts in between, then it becomes a setup. So all you have to do is you wait for price to make a rounded fake out, and in between price should break at least one low. That low may be from this lag like this, or that may be from this lag like this. If you see a break of structure or structure shift in this lag, then below this level, you plan your entry, you target 1:1 as your target, okay, and you put your stop loss above rounded flock, above rounded fake out, or you put your stop loss above the structure shift here. So if this is too much messed up, I'll show you with the example, then you will understand it better. So you do it like this, price goes up, make a rounded fake out, and if it goes like this, so there is a structure shift, but this structure shift should be below this level, not above this level. So this is not a market structure shift we want to see. We want to see like this, either this, or if price was going like this, either this. So if price breaks either this low or a low here, then we enter a trade, we put a stop loss here or here if it is very close, and then we target 1:1. That is called rounded fake out. So I'll show you with the examples, because rounded fake out sometimes may become confusing and it needs a lot of practice than immediate fake out. So I'll show you the examples of both. I believe that will be able to help you. Okay, so look at this. I have one here. For the example, I'm not drawing the support resistance with OHLC right now. I'll be using any support resistance to show you the immediate fake out. Okay, so look at this. I'm zooming it out. There we go. Now you can see if this is a support, you would notice that price drops like this makes in a downtrend setup, right? It was a downtrend. We might feel that price is going down, correct? But what you would have noticed, as the candle closed below, immediately the next candlestick came back. Do you see it? Immediately the candlestick came back. You got it? This is what we call immediate fake out. What we call it? Immediate fake out. The candle closed below, the candle closed back. Clear? Okay. Now let's move ahead and see if candlestick has closed above this high. No, it closed directly here. So it is very far. It is very far. If it has already gone 1:1 to this, then you ignore it, or very close to it, then you ignore it. If it does not, like if this candlestick would have closed somewhere around here, then you would have planned your entry here. Your stop loss would have gone below this, and your target would have gone like this. So this would have been your trade. If candlestick close like this, a very big candlestick, or already do the 1:1 concept, then you don't trade this. Okay, so in this scenario we won't trade it. Otherwise we might lose the risk to reward, the 1:1 thing, because the concept says that when you have an immediate fake out, the price must go at least this height, and it is already done. So you need to use your common sense as well in between, because it's price action. It's not something which may come directly, or it can be remembered or cramped. Okay, look at this here. Here we have a support. You can see immediate fake out, then candlestick close above it. You see candlestick close above it, then you plan your entry nearby. If it is already 1:1, you don't enter. If it is not, then you enter here and you target the move like this. So that's how you start looking for immediate fake outs. Now I'm going to look for some setups of the rounded fake out as well. On the daily chart, it's quite difficult to find rounded fake outs. I will have to zoom it out. If we got one, I have got one. I have got couple of them. Let's see if I got a fine one. Yes, there is a good one which I want to show you first, then I'll show you another. So you can see when price breaks below this low, look at this. This becomes the first closing and the second closing and the continuation of closing of the candlestick. Do you see it? So that is where we usually think that this is a breakout, and that is totally fine if you believe it. I do believe it. If I would be watching this chart like this, just from here, I don't have this data, I might be considering this breakout as well, and I might be looking for a trade of breakout. That is totally okay. And just in case you fail to get that trade and you got stopped out on that trade, so you don't have to be upset that I could not get the breakout trade. Just look at this. If this is a rounded fake out, this one, if this is a rounded fake out, if you see consolidation like that, wait for a structure shift, wait for price to break any kind of high, and there you have one high, and as it is broken, then you can plan your entry, then you can put your stop loss here, and at least 1:1 is what you can target. That's how you start looking for setup. This is it. Look at this. This is a rounded fake out. So if you start looking for rounded fake outs like this, if price keeps moving in a consolidation above or below a support level, then just don't look with blind eyes for a breakout. Look for a rounded fake out as well. And these fake outs can help you in scalping, in making a swing trade, or even if you don't want to trade them, you can utilize them with any other kind of strategy. You can use them to understand the price action. You can know at least the direction of the price and utilize any of your trade on smaller time frame as well with any other strategy. Even though I have taught many strategies on this channel already, at least 4 to 5 scalping strategies, you can go ahead and watch them as well. I'll add the cards in the end of the video and you can practice them. But if you already know the direction with the help of immediate fake out, you can use them to at least make your bias strong and follow the trend of the price action. So this is how I've given you a couple of examples here of the immediate fake out. Let's look for one more rounded fake out example. I had one here. Look at this. There it is. I don't know if I have drawn the straight line or not, but this seems like a rounded fake out to me. Below this stop loss, below this low, you can see a rounded fake out, then it shifts, a structure shift here, then price goes like this. So if you start looking at price not only with one eye of breakout, but you start looking it as it could be a fake out as well, either rounded fake out, either immediate fake out, you can use this strategy to implement to make your bias or even take a trade with 1:1. Do let me know in the comments below if you understood this setup or not. If you could not, then I'll be making another video as well for another strategy or other concept. I will add the examples of this concept in that, or even though you can go ahead and check my Telegram channel, that is free of course, links are in description. There I usually keep posting the examples of immediate and rounded fake out. So if you join that, you can always get the setups as an example in your dictionary, in your journal. And I believe that this is going to make a lot of changes in the way you do technical analysis on your charts. So if you like this video, hit the like button, hit the subscribe button and share it with your friends. I'll see you in any other video next time. Till then, take care of yourself and take care of your family. Goodbye.